Good evening, everybody. Back again with a update on the earnings picks that we put out this morning, as well as some kind of analysis on some trades I'm holding and a couple of earnings plays that came out after hours today that we'll be looking at in the morning, but I just want to mention them. So if you're watching, you can get a jump on taking a look at these earnings in the morning as the market opens. There's a lot going on. Obviously, this is a big earnings week. A lot of big name companies reporting this week as well as last week. So there's a lot of activity around earnings and some really good opportunities to make some trades. So first here, we'll just kind of go into an overview of the market. Overall, the S&P 500, this is the ES futures. It looks the same also if you were to kind of go into the S&P cash or the SPY. Everything looks exactly the same. I like the futures myself, but you can see that it's bouncing up and kind of bumping up against this 200-day moving average, which is this gray line right here. And so I anticipate it's not just going to blow through it. What I anticipate happening is a little resistance in this area here. If it does cross through the 200-day average, as we talked about earlier in the day, there's this area right here of congestion or churning, I guess, consolidation, which it could get. I mean, it could potentially go all the way up to the top of that area. But I think for the short term, there will probably be some resistance at the 200-day moving average on the S&P 500 or the ES. So, just keep an eye out for the trades that you currently have, as well as any long trades you're thinking about getting into for longer than a few days. May not be the best time because even the best of stocks, will go down if the market turns and goes to the downside, even for a short time. So I'm personally just looking at day trades, intraday trades, as well as potentially swing trades over the course of the next few weeks, in earnings because of the fact that the market has ripped so much higher from the December lows in such a short amount of time. So moving on, so that's kind of an overview of where we are in the market. Kind of, stuck right now, waiting on a catalyst to move the market, be that earnings or something else. Earnings, for the most part, have been pretty good overall. The larger cap stocks and the FANG stocks, most of the earnings have been pretty good. So the market has, been higher in the past several days to a week based on those earnings. So we'll look to see what the rest of the week holds. Got some bigger names, and then we will, you know, look to make some opportunity, take advantage of some opportunity as earnings present a lot of opportunity usually. So. Okay, so we'll start talking about a couple of the trades that I mentioned for this morning. So the first one here is Electronic Arts. This stock had earnings last night, and you can see it had a huge drop on earnings. And what I had mentioned in the morning is that I was looking for this stock to come back down to this support here, this trend line support, as well as this $74 area, 73.91 really, or $74 area of support for this pivot as well. So, and what I was looking for was a bounce off of that. I thought with the weakness it showed overnight, it had the potential to come down a little bit more and then potentially find some support down here. That did not happen, and so I didn't even take a trade on Electronic Arts because it really just kind of, if you look at the 5-minute chart, it just kind of consolidated quite a bit in the morning. It had a really tight range of consolidation here, and then did pop up quite a bit, from 79.50 to 81.50 around. So, I mean, if you were looking for a trade to the upside, you could have had a short-term trade, but I didn't trade EA. it found some resistance at its 200 moving average on the 5-minute chart. Um, so you see it kind of bounced up to that level and then just failed, and it just kind of consolidated throughout the day after a pretty big move to the downside. Had a little consolidation. So I'll actually be watching this stock going into tomorrow also for a potential pullback to this level as we were looking for, and then maybe take a trade for a double bottom bounce trade here in Electronic Arts. Next up was Take-Two Interactive, also another gaming stock. I did actually take a trade on this. This stock also had earnings uh, in the after hours. The stock fell quite hard, just like EA, but it bounced and recovered almost more than halfway from the very bottom of 91.20. And what we talked about here is either shorting it straight off the open on the 1-minute chart, um, or depending on if it could get back above the 99.74 level, potentially buying it for a gap fill. So you see it gapped down today on earnings, and actually spiked up very short for just a minute up to that 99.74 resistance that we talked about, and then proceeded to come down to the 92.50 area. 92.81 was actually the pivot, but 92.51 here is a pivot that I have actually marked off. So if you take a look at the 1-minute chart, you see the first minute it popped straight up to 99.74, found some resistance and fell hard. So what my trade was to short this stock if it crossed below the first 1-minute bar low. So I waited for the first minute bar to form. If it would have gone above it, that would have been a trade for the long side, for the gap fill that we talked about. But because it popped right up to it, up to the 200 moving average as well, and then just started crashing. Granted, you could have taken a short trade right up here at 99.74 because that's actually where it found some resistance in the overnight as well. So if you're aggressive or a little bit more, yeah, forward thinking, I guess, you could have taken a short up here and it would have been a little bit less risk to reward actually. So you could have taken a short at that 99.74 touch, that double top touch there. Set your stop just above the first 1-minute bar, and would have been a great trade. You would have gotten a lot more than I did. So I actually took my short trade here, which is underneath the very first minute bar right here at the 95.99 area where those arrows are pointing. And I did take the trade all the way down to this 92.51 pivot. It tapped that pivot and started going back up. So I actually sold out of the position right here for, a pretty good dollar amount. If you look at the dollar amount, a pretty good trade for a quick short first thing in the morning off of earnings. So, that was one trade. You can see if you look at throughout the day, actually, the stock did end up coming back down and actually got a little bit lower than where I sold it. Down here, you see the breakdown below. We had talked about this earlier in the day, but because it was so late in the day, you couldn't really take a trade off of this. At least I couldn't. You could see it went straight up after I got out of my trade, and it went all the way up to the 50 moving average on the 5-minute, and then came straight back down, tapped this 92.51 pivot again, went up, and you can see it made a lower high here. And you can actually, if you look at it in the overnight, it's lower high, lower high, lower high, 3 lower highs in a row. So really, that should have been a signal for a breakdown. And you could have taken a very short trade if you wanted to, as it broke down below this 92.51 level. But because it was so late in the day, it really wasn't a good trade to take. And as you can see, it just kind of stalled out here at the 91.51 level and didn't go below that. So a pretty quick trade. I was looking for a break of this 92.51 level early. Even if it had broken that 92.51 level, the first target would have been this 91.20 overnight low, and then I was even looking to go, for it to go down into the 80s. But because it didn't break that early on. In fact, it bounced right there and showed some support. I got out of the trade for a small profit. A pretty, I mean, $6, so pretty good profit. The next one was Disney, and I had talked about this not being really my favorite trade because it had already come up so much just before the open. I thought this trade would be either a good, bounce trade off of this overnight low area here, or 61. This 61.8 fib is actually from a longer term Fibonacci of the high to low, so it's really not applicable to the overnight session. But the overnight low was right around here at 112.50, and so what I had anticipated is that it would come down and stay in this area, and then potentially make a bounce play off of the overnight low, or a break below the overnight low, and then that would be a good short trade. But because it was already making such a big move in the pre-market from 112 all the way up to 114, I wasn't going to trade it to the long side. And my the hypothesis on Disney was a long one. So obviously it did not go up as I predicted. In fact, it started up. It actually did go up in the pre-market, but it made its move in the pre-market and then sold off all day. And you can see that's a huge bearish engulfing pattern actually right there. So the stock is pretty weak on high volume, even though what we talked about, this green bar with high volume yesterday, signaling a little breakout. This red bar, which is engulfing the whole green bar, and the volume is actually higher, is kind of bearish for the short term anyway. I mean, it is still hanging out above its 50-day moving average, and of course its 200-day. But you know, uh, right now there's really, I mean, I didn't take a trade because it didn't stick to what I thought my hypothesis was, and it really wasn't in the position pre-market to take a trade on with this big move. So no trade on Disney, although if you got in it short and you thought it was going down, you made a really good trade. It actually had a pretty big, $4 move, $3 move off the open, but wasn't the best trade for me. Like I said, it wasn't my favorite selection anyway, so no real trade there. The last one we took a trade on was Snap. So the two that I did take a trade on were Snapchat and Take-Two Interactive. So Snap was a pretty decent trade as well. Not for too much, but from a percentage point of view, it was a good trade. From a dollar value point of view, however, just a less than a dollar, 30-40 cents. So when you're trading small stocks like this, you got to think of it in percentage terms, and up your quantity, so that you can take advantage of that percentage move. So here is Snapchat, and what we had talked about, it actually, let me go back a little bit. It had a huge move in the pre-market, you can see here, and it was consolidating, kind of, leaning to the upside and consolidating in a bullish manner. I because of the huge move that it had, 22% today actually, even that's at the lows. Um, what my thesis on this particular stock was that it was going to run into some resistance around the 908 pivot and the 200-day moving average, which was prior to today it was at 921. So it was this 200-day moving average has moved because of the stock move today, but yesterday it was, and this morning it was crossing right here at this 921 area. So what I had indicated is that if the stock went up to the 908 or 921 area and showed some rejection at that area, I was going to short the stock. So as you can see here, well, let's put it on the 2 minute time frame. Let's see. This is where I made my decision on this particular trade. As it was approaching the 908 pivot, I took a look at it and I waited for the first red bar to form that closed underneath the 908 pivot. which is this one right here. And then I sold the stock right underneath that bar at the beginning of the next bar as it was coming down. So I actually sold it right here around 903, 902 actually, and then just held on to it. It didn't. Um, Let me put it back on the 5 minute. It didn't actually get back up to that level at all for the rest of the day. So, I mean, you could see it kind of made some attempts, a bunch of lower highs forming, lower high, and all the way to the end of the day, it just kept going down. I actually sold it at the end of the day because I don't like to hold positions overnight like this, especially in stocks that have such huge moves and then make a giant doji this way. So this big doji candlestick pattern. I mean, it could mean that it's just consolidating after a huge overnight move, which is exactly what it did. It went up 22% today. It could potentially gap up tomorrow, and keep going. Um, so I went ahead and took my short off the table. I don't like to hold shorts uh, overnight. So that was Snapchat. So two pretty decent trades for a good, about $3-4 total. We have some earnings that were reported overnight already in the after hours. We can talk about a couple of those that I'm looking at for tomorrow as well. And then in the morning, if I think Twitter reports pre-market, so I'll probably want to take a look at Twitter just before the market open tomorrow, and I'll try to put a video out about that if I can. So a couple stocks that had earnings this afternoon. The first is Chipotle Mexican Grill. Huge move in this stock after hours. It's gone from $526 all the way to $583 at the high, and it's just hanging out right in that direction even after the conference call. In fact, it went up a little bit more. The first move was up to this 562, and then it went up another 20 bucks to 583.95, and it's just flagging. So depending on what it does pre-market, this stock is kind of actually, if you look at it, it's a little bit of a reverse head and shoulders pattern on the weekly. I'm going to increase the time frame so you can see kind of where this stock is. You can see here, it did look like it was doing a head and shoulders, a giant head and shoulders here on the weekly chart. Didn't break down below that neckline though. In fact, it bounced. So, and then it looks like it's made a reverse head and shoulders here. And so with the move overnight, if it gaps up to where it is right now, for around 580, it'll be gapping up, right around here. So, pretty bullish move, and it could go a little higher from there. So you see there are some pivots noted on the chart here. You've got this, of course, this pivot here at 579, which is where my alert is, so it's kind of hard to see the blue line. I'll go ahead and take that off. So we have a 579 pivot right here, which is past where it is. You can see it's right at that pivot actually right now. So if it holds there and doesn't go any higher than that, if it gaps to that level and then just fails, you could look for a little bit of a retracement or I wouldn't say a gap fill. I don't know if it's going to fill the gap. It's such a strong move in the stock, but you could be looking for a retracement to the moving averages, 50 or 200, or to the 50% Fibonacci retracement in the overnight move. So if this is the top of the move and this is the bottom of the move, 50% retracement's right at 555. So if it doesn't get above this area and decides to fail and comes right back and starts, retracing, you could use these moving averages as well as the 50% as your targets. I personally think that this stock is going to go higher. I mean, I know it's already gone quite high, but with this kind of a move and the good news, unless there's some downgrade or something tomorrow morning, and with this pattern here, it could potentially pop up all the way to right here where this pivot is at this gap, 683. Sorry, 633.69. So I would be looking for, you also have these Fibonacci extension targets as well. So, I mean, these are simply mathematical, but they are pretty useful in case, in cases like this where there's just a huge gap, uh, between one pivot and the next, and there's not really any clear indication. But usually in a reverse head and shoulders pattern, you'll see the stock make the same move, um, or similar move, as the depth of this uh, reversed head and shoulder pattern, which, I mean, would indicate or could indicate that it would get all the way up here into the 660s. So I'm not saying it's going to do that tomorrow, but let's see what happens. There's a couple of, um, you know, a couple of scenarios, and I will be looking for the morning move because, as you saw in Disney today, it really depends on what it does right before the market. If it has another move, like significant move up or significant move down or retracement, that will change the action on the stock, and it will change my play. So what I'm thinking is if it remains this way, it will probably break out again and go higher. And I'll be looking for, um, a trade over the first 5 minute, 2 minute, or 5 minute high, depending on kind of the action of the stock. Um, and I'll be looking for it to, you know, gravitate towards the 600 level, then the 620 level, then the 633 pivot. So that's what I'd be looking for if there's a big move, in the morning on Chipotle. If it starts to retrace, like I said, I would be looking for a retracement if it doesn't get back above this 579 level. And here's a lower high already. If this is another lower high that's made and it gets down, starts to trade down in the morning, I will look for a retracement. First target to the 50 moving average at 563, and then to the 555 level, which is the 50% Fibonacci retracement. So it all depends on those first 5-10 minutes of the market, and how it actually moves. So you'll have to see if there's buying or selling. But what it looks like from this chart pattern, this is a bull flag. It could potentially go up. So that's looking for like a $20 move in the stock. I mean, at least to this level here. I wouldn't say it's going to be going all the way to 633, but I'd be looking for at least a little bit of a move to the round number of 600, which also kind of corresponds with this Fibonacci extension. So that's Chipotle. Outside of Chipotle, there is also IRobot. It's an interesting stock. It is, it's pretty choppy over here. This is a weekly, but you can see it's quite choppy. It doesn't really have a pattern per se, except for a lot of chop. It is now at the 105 level, which is a high. Actually, it's around 101. So it is set to gap up to right around here. Um, this stock has been quite choppy, but you do see a little bit. This is the weekly chart. So here's kind of, a channel. It's going down in this area, and then it breaks out, and now it's coming down again. If it gaps up to this area right here, which is where it is at 101, around 101, you could potentially see a see it come back up to this. It's easier to see on this 5-minute chart. It could easily come back up to this 104 level, which is this pivot here, or even to the overnight high of 105.80, and then probably show a little weakness there. Personally, don't know that I would trade this to the upside. I'm not a big. I don't honestly don't understand this move in iRobot. The company did beat on earnings and revenue, but it's just I'm sure it's a consumer play, but it's not a stock I really believe in that much. Believe the story on that much. So I'd be looking for a gap fill actually, back down to the 92 level. So if it shows weakness in the morning, I will be looking for it to trade back down to one of these pivots down here, either the 94.53 pivot or even a full gap fill down to any one of these pivots or the close today, which is 89.42, so right around 90. So perhaps looking for at least a retracement down to the 95 area if it shows weakness in the morning. If it shows strength, I probably won't trade it just because I don't think that I don't think it's gonna, blow out and go very much higher. It's already gone quite a bit higher. Um, and it seems to have, spiked up to 105 and then just fallen right away. So let's see what it does in the morning. But if you wanted to trade it to the long side, you know, above 100, it could go to 104. Obviously that pivot, right, that is a pivot right there as well. And if it cleared that, you've got this pivot over here about 109.50, and then the all-time high of 118. So you have some pivots that you can utilize, but personally, I'm going to be looking to fade it if it shows good activity in the morning. I'm not really, I mean, obviously everything depends on its action in the morning. IRobot, not really my favorite pick for earnings plays. I like Chipotle and a couple of others, so we'll move on to those. Here's FireEye. FireEye is a another kind of weak stock after earnings. You can see here's the weekly chart on it. You see it had a huge move down. This is back in 2016. And it's just been in this consolidation all the way, this whole base right here from 2017 and 2018. This is almost a 2-year base. Um, you know, would have been a good setup for a long if it would have broken out of this base on earnings out of the $20.50 range, but it did not. It actually has broken down and stayed within the base. So it hasn't actually broken this kind of cup pattern or bottoming pattern. Um, it's still above this trend line here, which is kind of a trend line from 2017, the beginning of 2017. So it's still, it's not going to be opening. If it stays where it is, it'll open right at about 1690, which, if you look at it here, yep, so you can see it a little better here. So it looks like it's going to be gapping down to right about here on the open, which is, well above the prior low here and the trend line. So what I'd be looking for FireEye is continued weakness down to this trend line or this pivot, or maybe even this $16 pivot as well. You know, it looks like this is the daily chart on it. So if it's going to be gapping down to 1690, which is like right around here, which is where it is right now, there's really no clear, support or resistance here until you get down to this $16 level. So $16 your first target on the downside. Go ahead and put like a pivot right here. And then, of course, the trend line. So if you scrunch this up a little bit, you'll see what I'm talking about. So in the morning, if it stays here and shows weakness, you can short the stock with a stop above the first 5-minute high, and look for it to cross through the overnight low of 1650, and then you have your first target of 1603, and your second target is this trend line here about 1550. That would be my target. I mean, if it got below that, you have some other areas here you could look at, which there's 1422 is your next pivot in that area. But I anticipate it, what I'm looking for is at least a move down to one of these support levels here. So I'm not looking to, I don't think it's going to go crashing down, but I'm looking for it to be weak in the morning, and potentially get a move from about the 1660, 1670 area to 16 or even 1550. So that's FireEye, and it just depends. Again, I know I sound like a broken record, but it does depend on what its activity is in the morning and how it opens. So always keep an eye on that first 1 minute, first 2 minute, first 5-minute bar, depending on how fast the stock is moving. Obviously, you can start with the 1 minute or have both the 1 minute and 5-minute up, and just keep an eye on that. And once you enter your trade, either long or short, you want to use that first 1 minute or 5-minute bar as your stop, either up or down. So that's just my rule of thumb and how I like to operate to get the most, give it a little wiggle room so that you're not getting stopped out too quickly on trades. So that's FireEye, and I think that there was another stock that had earnings today. So that was FireEye, IRobot, Chipotle. And let's just go ahead while we're here. We can take a look at Twitter. I know it hasn't reported yet, but you can see in after hours it's it's creeping up already in anticipation of its earnings. I think the consensus on Twitter is that it's going to have a pretty big move to the upside, in kind of corresponding with the similar moves in the other type of FANG stocks, technology stocks. Like a Facebook. If you can take a look at Facebook, it had a pretty big move off earnings. You see this giant gap. Um, Apple, huge gap on earnings. So I think that Twitter will probably, I'm inclined to think it will move to the upside. Snapchat even had a big move, and I think Twitter has maybe more market share than Snapchat does. Um, so I'm looking for a gap up in the morning pre-market on Twitter. If it gaps up to this 37.48 level, which is kind of the the gap fill. Actually, there's a giant. It's the bottom of this gap, not gap fill, but it's the bottom of this gap right here from the last two earnings ago. If it can gap up to and get to 37.48, I would look for some resistance there. But if it gaps and starts to go pushing through 37.48, that's a pretty bullish signal, and I would look for a gap fill eventually as a swing trade in Twitter, depending on how it goes. But um, looking for some strength. You can see here's kind of the the bigger view of Twitter. So if when it reports earnings, if it gaps up, I'd be looking for some resistance at 37.48. If it doesn't show any resistance and it just shows, very good strength and pops through there, you can see, you have some other pivots to go through, but there is a gap all the way up to around 41.50. So that's Twitter, and we'll go ahead and talk about the other earnings trades that come out in the morning. Lastly, what I want to talk about are some of the stocks that I currently hold positions in. We didn't have time really to go through that this morning because I wanted to get my video out prior to the market opening, because it had earnings picks. But I'll just go into a couple of trades that I actually have. You can see I have some options, an option trade on Array Pharmaceuticals. I bought this stock using options a few days back as it was breaking out of this pattern right here. I actually bought it, with the expectation that either it was going to break through this $20 area or show some resistance. It has broken through, and I continue to hold my options. And my target here on Array Biopharmaceuticals is actually this trend line here, which is kind of an ascending trend line from the prior two highs that were prior two peaks here from last year. So let's pull up the weekly chart on Array. You can see it's pretty bullish. It's had some pretty volatile, choppy moves. So if it can get up to this trend line, then that's great. Right now, I know that this option is looks like the stock has to get way up here for it to sell, but it obviously will change as the days move. I put it higher just as that's just where I priced out the option if it were to hit this trend line. So I'll adjust it as needed, but what I'm looking for in Array is a move right up to this trend line and then a rejection at that trend line. It actually does have earnings, but it's not all the way. It's not until May 8th. It already reported earnings on February 5th. So that was yesterday when it reported earnings, and I actually purchased this option a couple of days before that in anticipation of good earnings, because you can see here this big move, consolidation, breakout from the $18 level, and then starts pushing up into this area. So I anticipated positive earnings, but really just was looking to see what it would do at this prior high of 2019. So right now my stop on this is this prior high of 2019. So if it today it kind of had some weak action first thing in the morning, but I always wait for that first 5 minute or 15-minute bar to see what it's actually going to do, and use that as my indication. So it just popped down real quick in the morning pre-market and then came right back up first thing, which is why it looks like it went below the line. And then it just stayed, and you can see it showed the line acted, the prior high or the pivot here acted as an area of support twice, bounce, bounce, and then it's gone up. And actually, in the aftermarket, it has gone a lot higher. Wasn't anticipating that. There's no news, I don't think. So maybe just continuation of movement on the post earn. It's like a post earnings high, basically. So from yesterday's move, it's made another big move in the after hours, which is great. So that's Array. I do hold Array as well. I actually hold Tilray, and I think I did tell you guys about that this morning. I have an option on Tilray. My stop is $70. I'm actually not going to uh, sell this option unless the stock gets below this basing, the bottom of this base here, because this stock is so volatile and it moves around so much. It's a cannabis stock. Um, I've bought it for a breakout. It actually has not worked too well, but I am holding the stock. In the form of one option, one single option, which is why I'm able to hold it, uh, give it a little bit more room to work because I have limited risk. So $70 is probably my stop here. So let's see how the pot stocks in general were kind of weak today, with Kronos, um, kind of going down. I actually have a put on Kronos from yesterday. I was short Kronos after this giant parabolic move. I shorted the stock via a put um, this day, yesterday. And so it's worked out kind of well. My target is this first area of where it broke out here. So this first area of congestion that it'll run into around the $18.40 level. So that's where I've positioned my option to sell. So which is a put option. So looking for a little more weakness in Kronos. And it does have earnings coming up here on the 13th. So I'll probably try to get out of this position prior to earnings. So that's Kronos and Tilray. And then just kind of overall, here's the marijuana stock ETF. You can see it also showed some weakness today, but it's had a big V move. I mean, it's probably going to have some consolidation. It's still well above its 200-day and 50-day moving averages. So, like I said earlier, I'm looking to trade some cannabis stocks. They're pretty strong this year, and I only anticipate them getting stronger in the long run because of all of the regulation that's being changed, especially in Canada and some of the states in the U.S. as well. So with that, so I am holding on to just a couple of positions. So the Array Pharmaceuticals, Tilray, and Kronos, all via options, all swing trades, and looking at some other potentials going into this week as well. Just in general, from a FANG stock perspective, Amazon here showing it's just consolidating after earnings. It's looking kind of weak today. So, like we talked about the S&P 500 coming up into some 200-day moving average resistance. It looks like some of these stocks are also running into resistance as well, the FANG stocks. Apple actually showed a little strength, but it did pop right up to this. You can see this moving average. It's a complex trend line here, acting first as a level of support, then acting, once it broke through that, it's now acting as resistance. So I'm looking for Apple to stay below this level actually, and if it gets above there, that's super bullish, and that'll be another consideration for a long trade. But honestly, it's moved so far. I anticipate some resistance in this area in Apple. That's FANG, so that's Apple. Facebook we talked about already. Huge move. It's also coming up on this resistance here. You can see it popped right through it today and fell hard, and it's just consolidated in a bearish flag all day. So Facebook, we're looking, it's still above its 200-day moving average, but you could look for some resistance at this level, even if it's just to consolidate here before another move higher. So Netflix is the next one in FANG. So let's see. Netflix, yep, you can see also super strong moves coming up. It looks like it's double topped up here. It has a little bit more room that it could go before it runs into this trend line, but it is showing some weakness today. And last but not least, Google or Alphabet, also showing some weakness today. Actually, down 2%, more than 2%. After its earnings a couple of days ago, it did pop up above its 200-day moving average, but today it actually failed it. It looks a little weak. You can see actually talking about Google while we're here, you've got it touching its 200-day moving average 3 times now. It's popped above and failed, popped above and failed, popped above and failed, and then earnings brought it up, and it actually closed above its 200-day average 2 days in a row. And then today it has failed it again. So, granted, these 2 days were very high volume days, so it could just be a temporary weakness, of the stock, some profit taking. But if it manages to stay below this 200-day moving average, uh, we could see Alphabet coming back down and consolidating a little bit, perhaps looking for this gap fill, as the market turns over as well. So that's the FANG stocks, and we talked about the overall market and some earnings plays. I hope that it helped you guys in your research for earnings trades tomorrow. Have a great night, and I look forward to bringing you guys some more information in the morning.